value of the above mentioned property based on comparable square meter method is as follows: area of land in square meter, area of land in square footage, price of square foot, value of the land, and then built up area, and then value of the construction, and then total value. And then they put the book value and the sale value. Please do not hesitate to contact me. Regards. Right. So what do you guys think? Now that you've sort of got trained on reading reports, do you think this guy passes mustard? Based on that report, this guy is now much more qualified. Don't worry, guys. But that was an old report before all of those. Okay, so Anand is saying that the methodology is not clear. Is it DRC? It's fair to assume so, right? I mean, he says land and then construction and then total. But what did we guys learn about a villa? And then it says market value, right? So what do we guys learn about villas? You should be using a comparative method, right? So let's look at the results of no depreciation as assumed. Exactly. So let's look at an audit report on that. So according to VPS 3 or IVS 103, remember the 16 points. So identification and the status of the valuer, he identified himself. Identification of the client, he done so successfully. Purpose of the valuation, the purpose is missing. He did not specify what the purpose is of the value, of the valuation. Typically, we would expect bank mortgage or loan, court dispute, selling the property. That was completely missing. Identification of the asset, he had a very nice description of the asset. The basis of value adopted, not very clear. Sometimes he says market value, sometimes he says, but then it's not consistent. If the basis is market value, then he comes up with a cost approach. So it's not very clear, right? He puts the valuation date, he puts the extent of the investigation, the nature and sources of evidence. He says based on comparative per market. Remember that? He said based on expected book market value based on the above mentioned property. Oh, look at this. He says also book market value. That's not an accepted basis of value, right? It's incorrect. There's no such thing as book value in asset valuations. Market value that we're looking at, not book value, right? Based on comparable square meter. Okay, then where's the comparable evidence, right? Where's the table of comparative evidence? Assumptions, he has not put any assumptions. The format, that's subjective. There's a format to it, but it lacks consistency and coherence, right? Restrictions on use, he did not put any restrictions on use. For example, this report is for internal uses only, or it can only be shared with, it cannot be shared with third party without the permission of the client, etc. There's no identification of the client in terms of the rights of distribution. Confirmation that the valuation will be undertaken according with the IVS. There's absolutely no standards referenced, right? The basis of value obviously is all over the place. Sometimes it says book value, market value, cost, not clear. Is it registered? No, it doesn't say where he's registered, where he's coming from. For all we care, this guy could have come from any place. A statement that compliance with these standards. There's no statement of compliance. A statement sending out the limitations on liability. There's no statement of liability. VPS 4, which is also the same as IVS 104, the basis of value assumptions and special assumptions. Selecting the appropriate basis of value. No, he did not select the appropriate one. Listing, he does mention market value and so forth, but he has clearly not stated that the basis of value is market value. And then he writes book value in the end. Listing sufficient assumptions, there are none present. Selecting the appropriate approach, obviously you can see that he's trying to use the market approach, but then he uses the DRC method. So where's the comparative method, right? No comparatives were provided, no weighting was provided. There's no reasonable conclusion of value, right? So generally, this would not be an accepted report. Even if the value you think is correct, it is not compliant with the standards. Is it clear? Let's look at example number 2, valuation of a plot of land. Wow, you guys should put this up full screen. Sorry about that, very tiny. So again, he starts with valuation report. He puts the identification, plot number, etc., the date of valuation. He puts the table of content. In the table of content, he puts executive summary, terms of engagement, investigation, extent of investigation, the valuation approach, the opinion of market value, the appointment correspondence, which I guess is the engagement letter, valuation assumptions and basis of value, terms and condition, title deed, zoning classification, and Google Earth. He puts the client name and instructions on purpose of the valuation. He puts the valuation standards used, the subject of the valuation. He puts the basis of the valuation. He puts the date. He puts the market value, actual conclusion of value. So he already hit a lot of compliant points, right? The instructions, where they came from, the purpose of valuation, the valuation standard used, the compliance, the subject of the value. He put his valuer credentials, the date, the report date, the currency adopted. Remember, we had to put the currency adopted. Interest valued, is it a freehold, land, the location, the property ID, the plot size, inspection date, the title and tenure, property description, state of repair, so that's, I guess, the result of the inspection, tenancy, the market value definition, so he puts the definition of the market value and the methodology used, the valuation parameters used, right? And then the opinion. And then in the different pages, I didn't include that because there are other 14 pages. He puts a signed engagement letter. He puts the evaluation assumptions. He puts the terms and conditions, the title deed, the zoning, and the Google Earth. So you can clearly tell right away that he's checking all the boxes, right? Some comments would be valuing the freehold interest is not a purpose. A purpose would be for bank collateral, mortgage, or whatever, but that's okay, right? And some of the issues that he had, it was okay. Selecting the appropriate method is okay, but there's a few comments on that. And the weighting techniques, I think, would be the biggest fault that he has. I mean, he came up with the opinion value without a comparative analysis, or without mentioning where those compared evidence came from. So I think this is his weakest point. But beyond that, I think the report is spot on. So again, the biggest comment is the valuer makes unsubstantiated claims on the prices and costs of the inputs to the residual calculation. Comparative evidence is absent and sources of data is not present. The steps in the residual calculation are not outlined. A breakdown needs to be presented that has to be traceable and verifiable by anyone who's reviews the report, and limits of liability are missing. I think these are the 3 comments that are missing from his report. Beyond that, it's pretty compliant. So I think a few comments like this could be given back to the valuer. If you guys are in the compliance department, they should be able to fix that, repair that, submit it back to you guys, and it should be okay. So by that, I think we arrived at the end. So we're only 15 minutes over time, which is excellent. You guys have any questions?
I would just like to say, I mean, obviously we've got a lot of lenders here, a lot of financiers, you know, banks, financial institutions on this call. I would urge you to just go back and have a look at some of the reports that you've received based on, you know, the session that we've had today, because I have seen a number of reports submitted previously to banks in Bahrain, and honestly, it really is quite unbelievable. You know, some of the valuations that have gone in to banks, and banks have lent on them. You know, I'm talking 50, 70 key hotels that have been valued by valuers literally on a land plus build basis. So the people have just got the value of the land, or what they deem to be the value of the land. They've looked at how many meters squared the property is. They've come up with a figure, and they've times the 2 together, and that's the value. Now, if you have given out loans on that basis, you might want to get a revaluation done by somebody that is now licensed, or you know, fully qualified, because I can tell you now that those valuations are not worth the paper that they're written on at all. So I suppose that for me is the key point to take away. And the other thing is, you know, if you have lent on those assets based on those reports, and those individuals do not have professional indemnity insurance, the bank has no recourse whatsoever to follow those people in the event of default on a loan. So that for me is the key thing to take away. Yeah, so that's it from me. I'll listen, see if anybody else has any questions.
So to iterate on that, absolutely. If you cycle back to the motivation behind this entire initiative by Bahrain government, imagine an investor coming in and investing over 50, 60 million dinars in a hotel, and you get a valuation that's just land plus build. I mean, that's someone who is coming in from a very sophisticated investment background, for instance, or coming in from a highly regulated market like in the UK and the US. And, you know, they see this. And unfortunately, to many of those people, this is a farce. This is not a valuation, right? You have to look at the proper approach, the appropriate method, what's the evidence. So now, hopefully, the purpose of this initiative, and this is not just you guys, not just the bankers and the people who are going to be procuring valuation services, but it's the whole institution, right? It's training the valuers themselves and qualifying them, training the bankers themselves into realizing the worth of the valuation exercise that they're going through, and that it's actually more involved than they just stamping papers and stamping values. And
100%.
also the investor is going to be educated on, they just can't go to a bank and they just can't go to a valuer and tell them this is how much I spent on this thing, and this is what I should be expected to, what I should expect the valuation to look like. And also the government and the sort of the decision makers and the regulators, because massive economic decisions and massive investment decisions, an entire nation's future is dependent on an industry that is responsible for 70% of its worth, right? Today, real estate is 70% of a nation's worth, essentially. It's more valuable than anything. So I will, so answering Sarub, I apologize. All these slides are already pre-uploaded into the course. You can download them. Absolutely, you could have followed along with me on your own computer. This recording is also going to be available. Jordan?
Sorry, yeah, I was just emailing somebody very quickly.
Naimi,
yeah,
from BIBF, I think he can answer that. Are you on?
Ahmed is. I was just emailing Ahmed actually, but yeah, he. I think everything will be available. Slides. We've made a recording, so I don't know whether that will or won't be at this stage. I don't know on that one, but the slides will definitely be made available. If we can get the Excel sheet that we mentioned earlier, Tarek, we'll make that available. The other thing to say is the feedback forms. If you can complete the feedback forms, that would be fantastic. It's vital to us moving forward. Any suggestions as well? If you guys have any suggestions, please let us know. If you'd like the course to be shorter, I mean, obviously this was our first trial run because of the COVID-19 situation. It's not ideal. I know that. I think Tarek knows that. I think we all know that. We would prefer it face to face, but desperate times call for desperate measures. The other thing is to say, you know, if you feel like you would require more courses on this, or you'd like to get a little bit more knowledge, delve a little bit more into the depths of the methods, or look at more horror stories, more valuation reports, we can certainly do that as well. So today was a bit of a snapshot. I think if we had been face to face, we may have broken away into little little exercise groups and maybe run some exercises. Maybe we can look at that again for the future. But on the whole, I think it was pretty good, and I hope you enjoyed it. And I hope we get to speak to you all again soon.
Thank you. Thank you. Go ahead. Yeah.
Hi, Anand here. Thank you, Tariq. Thank you, Jordan, for a great presentation. I have a couple of questions. Can I ask?
Sure.
Yes, absolutely. Let me first. I have to give Ahmed Naimi is asking me to tell you guys that there's a post course assessment that's 30 questions. It shouldn't take you more than now that you should be answering 100% now, guys. Please. It shouldn't take you more than 15 minutes to answer. Please make sure you answer those today. I will stick around right now if you guys want to fall off, however you guys are tired and you just want to go and fill up that post-course assessment. It's for you to pass that course. You have to pass that exam. Also, give us feedback if you think this, again, reiterating Jordan's comments, if you think this training should be in Arabic, if some of you are suffering with the language, please let us know. The pace of the training, is it too heavy? You think the material was too heavy? Should it be split up into different courses? Let us know. I know some of you are already bored because it's just too easy. Some of you are overwhelmed because it's too difficult. I think there's a gamut of impressions that I'm already getting. So please feel free to fill up the feedback on that. I'm going to be sticking around. I'm sitting around until everyone signs off. If you have any random questions, any good questions, bad questions to me are all the same. I'll be sticking around, Jordan and I. But thank you so much for those who want to drop off. I know you guys are busy and have busy schedules. Ramadan Mubarak is coming up. And hopefully the next session will be in Ramadan for you guys who want to attend again or tell your friends and colleagues to join in.
Thanks, guys.
Yeah. Hi. Tariq, my question is, I'm not clear if a banker is financing a hotel project, whether it's an existing hotel or a new hotel to be constructed. What is the most appropriate method of valuation? Is it investment DCF or is it profits? Those are the two methods I'm confused about.
What do you think? I mean, what do you think is, so you mentioned the only two methods to value a hotel, which is the DCF or the profits method.
Correct.
What do you think what would you expect? I mean,
in DCF, investments DCF would be the most appropriate as per what I understood.
Okay. You will not be mistaken. That is correct. So again, the distinction between, I would use the DCF method, right?
Okay.
But when is it that I use a profits method? When there are no comparable evidence. Let's say, for instance, I got once in Egypt, for instance, I valued a hotel that was beyond the high dam. The high dam in Egypt is in Upper Egypt, is south of Egypt, and it was the only hotel in that entire region that's a 5-star hotel. I had no comparative evidence of what an appropriate ADR would look like. I don't have any transactions. I look at the DCF, it's completely dismal, it's zero, right? It hasn't yet operated, it hasn't really started. So I don't know how to value this hotel, right? I can make assumptions, comparables from different cities, different towns. But I think what I ended up doing is using the profits method, because it gives me a benchmark. Okay, so there's a lack of evidence. I can't use the investment method. I cannot use comparable method. Okay, I'm going to use the profits method. So an exception like this is, I think, deemed appropriate. Another situation where you use the profits method is when you have to split or you have to determine the underlying asset value, not the business. You're not valuing the hotel. You're valuing the underlying asset, right? So, for instance, you have a building that's owned by a company, an ownership company, and they hired in, or they're renting it out to a second company that's going to pay rent to the first company. They're going to operate it. operated as a profit, obviously, entity and pay rent or profit share. So as a property owner, your income is that portion of the profit. It's not the entire income of the hotel, right?
Correct.
You have to
Correct.
capitalize that profit.
Correct.
So yes, you do have to run a DCF anyways. You have to run a DCF exercise in a profits method. That's why it's an income approach. But then how do you split the owner's share from the business operator? That has to, this is difficult. It's a very difficult. That's why it's a very specialized method. It's only, it's only for Class A, and even for Class A firms, very specialized teams, like Jordan was saying, inside that firm. I know JLL, for instance, has a hotel valuation unit, right? It's a very specialized unit, even though they have extremely strong investment valuation teams. But when it comes to hotels, it's a specific unit that does that. And they have 30 years of experience, for instance, doing so. Savills, CBRE, I'm not endorsing anyone in general, but top 10, all top 10, KPMG, PwC, everyone, when it comes to hotel valuation specifically, because it's a huge market, they usually have a specific team that is basically assigned to that type of valuation. And yes, when you look at the valuations coming up from those teams, it's either a DCF, if the owners, if it's owner operated, that is a DCF, but if it's owner leased, or you want to determine, or if it's a co-development, sometimes it's a co-development. It's the government leasing the land for as a BOT, right, to a developer. So sometimes it's a development appraisal of a mall. It's not just hotels. You're looking at, for example, hospitals, schools, cinemas, complexes, mixed-use complexes. The land is given for free, or is given as a usufruct, right of usage for a rent.
Correct.
Okay. Right. So how do you come up with the value of land, or the rent, or it has to be paid? Absolutely profits method, right? So it really depends on the asset and the purpose and the ownership and the interest being valued. But it wouldn't go outside the DCF or the profits method. I would expect either of those two. And in either cases, a DCF of a hotel or something that huge, or a profits method, I wouldn't expect a valuer that is classified less than an A. I would not hire, personally, if I were you, as a risk department, I would not hire a tier B or C or D for a hotel valuation anyways. And a tier A would be able to distinguish between a profits method and a DCF based on their judgment and their justification.
Oh, yeah. Thank you. Thank you for the detailed clarification. That obviously means the existing valuers have to start looking at the cash flows that are being generated by the hotel, which they don't do now. It is like you said, they just do the land plus the build, which means they're not looking into the cash flows at all currently. So the whole approach it would be that they have to look at the cash flows, and even the owners or the borrowers who are coming to the banks for against the collateral of the hotel should be willing to share the cash flow information with the valuers for them to use the right methodology.
Yeah, I mean, a land plus build, I mean, you might as well just put your finger in the air and think of a number, because it really, it doesn't mean anything.
So that's actually a very good question. So again, how do you substantiate your profits method or DCF if you don't have the operating cash flows of a hotel, right? So I think it becomes empirical that you, as a banker, you have to ask, if you're going to give a loan to a bank or a business, part of the requirements, the documents that they have to submit is their audited, for example, statements over the last 5 years, or their projected cash flows, right? They have to submit that. How would you otherwise value a hotel, right? And you have to.
Sorry to interrupt. They do submit it to us, but it doesn't go to the valuer currently. That's how the process works. Most of the banks do get the cash flow information, of course. The valuers don't get it.
Yeah, and I if I were you, I would not give it to a valuer unless that valuer is both qualified and has already signed an NDA, right? Why would I give proprietary information to someone, a third party, without ensuring first that that they have signed a confidentiality agreement. And this is part of what you should be assuring your customer as well, your client, is that all our valuers, all our vendors, etc., we have a process of both ensuring confidentiality and ensuring impartiality as well, right? So, and liability, right? The three components to a trustworthy valuation. I would encourage everyone in the banking sector to follow that example that you're mentioning on it. And I would not give data to a valuer in the current state. I would first qualify that valuer, make sure that they're Class A, make sure that I have a contract with them, make sure that there's an NDA, they have proper liability, and then hire them for that job before I give them that data, right?
Thank you. Thank you, Tariq.
Thank you, Ayman. Thank you. Muhammad is asking a question. I don't have the authority to answer that one. Ayman is asking.
I believe the exam is open until 4 o'clock tomorrow for everybody to complete. I think Ahmed mentioned that earlier. So I think if you can't make it today, you can do it tomorrow. If you could get the course evaluation form filled in, that would be great, purely because we have a meeting with RERA tomorrow, and we may go through some of the evaluation forms. So that would be helpful. But I think the exam can be completed by tomorrow. Yeah, Ahmed's just confirmed. So open till 4 o'clock tomorrow to complete the exam. Thanks, Ahmed.
It was an extreme joy, guys, to do this course with you. Please feel free to reach out to us even after this class. I will put I should have put my contact information at the end here, but let me switch over. So I have my email on top if you guys want to reach me, or my phone number. It has WhatsApp. You can also reach Jordan and the BIBF. Any of us could easily circulate the questions and hopefully answer any questions about that presentation. I know Ahmed, Naimi, is this session recorded? They can access to that recording later on?
Don't know about that one yet, Tariq, because we do, well, I don't know about the recording being handed out, but I think it's for internal use at the moment.
Okay. Well, at least the slides are there for internal use. Okay, so I guess the recorded session is not public. All right, because I just got that question on a private message. I guess that answers your question, private sender. All right, so any other questions before we log off?